Hey everyone, Andy Tanner here. In today's video, I'm going to answer the question on every new investor's mind: what are futures in stocks? If you're a complete beginner looking to learn the basics, this video is for you. A lot of new investors shy away from futures trading because they seem complex and intimidating, but by learning the basics that I'll explain, you'll find more confidence and you'll be ready to explore this exciting part of the stock market. So in today's video, I'm going to give you a quick introduction to futures, how they work. I'll give you an example to make it super easy for you to understand. And then I'll provide some scenarios where trading futures might be the right option for you. So let's start with what a future is. And I found the best way for sure to explain futures is to leave the stock market alone and simply take some time to talk about commodities for a minute, like corn or oil or soybeans. So we have two people. We have Farmer Brown, and Farmer Brown, he's on his farm and he's growing corn. He's growing that corn nice and high. Farmer Brown growing corn. You have Frosted Flakes man over here, and he needs to buy that corn to make his Frosted Flakes. And so these guys need a partnership. Well, they have a problem. They don't know what the future will hold, hence the term. They're worried about what might happen in the future. They don't know what the price of corn will be in the future. Maybe it's a bumper crop and there's corn all over this, and there's lots of supply and low demand. And in the future, well, the price of corn is down. Or maybe we have famine and pestilence and bugs and awful things and a heat wave, and there's hardly any corn and the price of corn is high. Well, the farmer, he wants to know in the future that he can sell for at least a certain amount. And if he can get some stability in that price, he might give up the upside of a higher price to fight against the downside of a lower price. And certainly Frosted Flake man, well, he wants stability in his business, and he would rather maybe give up the chance for really low prices if he can ensure that he doesn't have to pay really high prices. So they'll come to a bit of a compromise to bring stability to their business so they know what the future will hold. Certainly much easier to run both their businesses if they have a level of confidence or surety about what prices they're going to get for these commodities. So what do? They shake hands and they agree on a price in the future. So these do have an expiration date, but if you've watched the options videos I've done, this is totally different than an option. They really don't need any choices here. They don't need an option to do something or not. They know that they want to sell corn, they know that they want to buy corn, and they know what price they want to come together with. And so that's really nice because even though there's an expiration, you're not necessarily really pay for any time value in this. We're making an agreement to buy at a certain price, sell at a certain price in the future. That's what a future contract is. That's what it does. It brings stability to the future in terms of prices. Now, how might this work in stocks? Well, stock buyers and stock sellers, they have the same worries. What's the price going to be in the future? And so it can sometimes be advantageous that if you feel you want to make a transaction, that you set up the ability to do this in the future. Now, one of the nice things that futures contracts bring to stock investors is that these can be leveraged instruments, or what we call a derivative. So let's talk about those two concepts. I think we've got it simple with our example of Farmer Brown and Frosted Flakes man. We understand they want to control the price in the future. But let's talk a little bit about leverage for a minute, because this is a game changer when it comes to risk management. Let's also leave the stock market here and talk about something you already know, which is insurance. You know, you might have a house that's $1 million, $2 million, depends on where you live, right? But you don't spend near that to insurance. You get to spend a small amount of premium relative to the value of your home. It's that leverage, the ability to spend a small amount of money to control the safety of a large asset, that is key. So let's suppose that I have the right, or I make an agreement to sell, let's say the S&P 500. Let's say we get an index that represents the entire S&P 500. And I get in the contract that I says, I'm going to sell this here. Well, if the market were to drop way, way down, that contract would be worth a lot of money to be able to sell the market high, even though it's gone down low. And if I could do that for a fraction of the cost, like insurance, if I could pay a small amount of money to guarantee the future price of sale, or on the other side, the future price in which I can buy. That just gives you a lot of power. So there's three things to really understand to make this simple. Number one, I understand that Farmer Brown and that Frosted Flakes man, they don't want prices all over. They want to make a dream in the future. I also understand the stock market, these are derivatives that have leverage. My gosh, it's just like insurance. I spend a little bit of money to control a large value asset. If you take those two ideas and you put them together and you develop a futures contract in the stock market, now I have the ability to use leverage where I can use a small amount of money to control the risk on a huge asset. I can create a hedge to where with a small amount of money, if my big portfolio goes down, boy, the futures contract explodes in intrinsic value. So learn more about this and make sure you subscribe. Now that you understand a little bit more about futures, you might be wondering how to analyze the type of companies and decide what type of stocks you invest in. So check out this video and learn my strategy for analyzing stocks so you can make confident investment decisions. If you found this video helpful, don't forget, like the video, subscribe to the channel, hit the bell notification so you don't miss the next one.